Hi there, welcome to Kneppy Invest. It has been an absolutely fascinating reporting week on the ASX. A plethora of companies have released either their half year or the yearly results. A few companies have released their yearly results, but we have seen some violent reactions from the market. Now, I'm being a little bit hyperbolic saying violent, but definitely that is true for Domino's Pizza. After they released the half year results, the market has absolutely punched this company with the share price currently down 24.5%. I am recording this video at about 2:15 p.m. So the share price could bounce during the next hour and 45 minutes, but the share price seems to be drifting down during trading today. And it's really interesting for me personally because I did a little bit of research on this company a few months ago, and my buy-in price to take a position in this company was just under $60. So between $50 and $60, I thought maybe that could be a good time to take a position in the, Domino's Pizza. Currently, the share price is $53, and I'm yet to take a position. I might yet buy some shares later today, but I'm a little bit nervous how they dealt with inflation during the last half year and how they dealt with inflation affected the company performance. And if they can recover from that little facet, that little thing, then I think this should be a short-term hit to their profit, to their revenue as well. But if they continue making similar mistakes, maybe not the exact same mistakes, but similar mistakes by misreading the market, this could have a longer term effect to how these companies perform. Now, I am a fan of Domino's Pizza, their strategy, their future strategy, also the management of this company. So I am willing to assume that this is just one of those mistakes management of a company might make on the odd occasion. And they are aware of it, and they spoke quite frankly about the mistakes they did make during the past half year. So I think there is a chance that the performance of Domino's Pizza will rebound, if not in this half year, in the next financial year. So let's have a look at why the share price of Domino's Pizza is down 25% on February the 22nd, 2023. First of all, let's have a look at some of the key metrics for Domino's Pizzas, and these are pretty ugly when you compare the first half of financial year 23 to the previous corresponding period. Sales down, network sales down 4%, online sales down 4.5%, EBITDA down 14%, profit down 21.5%, earnings per share down 22%, dividend down 24%. That's exactly what you don't want to see if you are a shareholder of this company. But just because these numbers are down a lot doesn't mean that is the reason why the share price is down 25%. It's all based off the expectations of the market. And the management themselves mentioned that they did have a worse than expected December, and that is probably plaguing the market, playing on the market's mind, and that's why the share price is down a fair bit. That's why there are people out there willing to sell shares in Domino's Pizzas right now. So the first thing is these numbers are bad. They look bad on the surface, but also they were worse than expected. So why were they worse than expected? And I'm really happy the company did this little dot point because this was in their presentation. And I went through their commentary in their media release, and I was going to do a dot point, a little slide here, but they've done the work for me, which I'm very happy about. I love when companies do the work or does the work for me. So the reason why, or one of the major reasons why Domino's Pizza really had a bad half year was their response to inflation. And they've been really frank about this. So they decided to offset rapidly increasing inflation through price rises, particularly higher delivery pricing, including service fees and higher bundles. But that reduced delivery customer acquisition and retention and customer counts. And just see here, I just mentioned in the previous slide that they mentioned that the December numbers were worse than expected, and actually mentioned that in this particular commentary. Customer counts have not met expectations since December. In fact, it's since December. I thought it was just in December, particularly in Europe and Asia, lowering store profitability. So they are undergoing um, rethinking of what they're doing in regards to response to inflation. And it's really interesting when I think of Domino's pizzas, I think of cheap pizza. I think of cheap, low quality pizza that I don't go to very often. I am not the biggest fan of Domino's pizzas. And in fact, I did try some of their pizza about 2 months ago, and my opinion hasn't really changed. But what surprised me a few months ago was how much more expensive they were than I anticipated, particularly compared to the pizzas I like. I prefer, if I'm talking about like a brand store pizza, I do prefer Pizza Capers pizza. I think that is a higher quality pizza, a little bit more expensive than Domino's pizza, but not that much more expensive. And that was what surprised me because I think of Domino's pizza as being lower quality, cheaper sort of pizza. So that's something they have done. They decided to raise their prices, and that has not worked. And you just think of the market that Domino's Pizza is aiming towards, and you would assume, and this is just me making an assumption, it's on the lowest socioeconomic group of people that they're aiming their pizza for. And if they raise their prices, particularly in places in the world where people aren't getting wage increases, and Australia just announced, the Bureau of Labour, whatever, announced that wages in the last quarter only rose 0.8% in Australia. So we're not keeping up with inflation. So if inflation keeps on remaining high and wages don't increase, people are going to stop spending money, even on pizza. Even though I thought people might revert to Domino's Pizza because it is cheap. And then I went to Domino's Pizza and it's not as cheap as I expected. So this would have an effect on the market. If they raise their prices, people are less likely or will be less likely to buy Domino's Pizza. And they have seen that effect, particularly in Europe and Asia. And I think they might see that effect in Australia if they don't rethink their strategy. I personally love going through companies' financial presentation, after they release their half year, full year results, particularly those companies who put a lot of effort in providing information to the shareholders. And this is a great slide here because it shows you the history of earnings per share for Domino's Pizza over the past 10 years, broken down into the half years. And this company saw really good growth between 2013 and 2019. In fact, earnings per share quadrupled in that 7 years from 41.5 cents to 165 cents. But the company has struggled since then, apart from a really good year in 2021, when the share price of this company, if I remember correctly, got up to $160 or something insane like that. So the market thought that really good year would continue forever, but of course it wasn't. Now, this particular half year was this company's worst half year in terms of earnings per share since the first half of 2019. So we're talking about pre-COVID-19. And if they see a similar half, with say earnings per share of 82.5 cents, that means this would be, financial year 23, would be the worst year since 2018. And that would mean two consecutive years where earnings per share has decreased. Now, this could be just a short to medium term issue, and then the company responds or rebounds back to an earnings per share growth profile. And I do expect that eventually, simply because of the growth strategy of this company. But the management have to be careful because if this starts being a nasty trend, their positions in the company will be under threat. I worked in Japan back in 2005, 2006 for about 8 to 9 months. And the place I worked for did have like an afternoon or evening party where they provided all the employees with some Domino's pizza. And to be honest with you, never again. I did not try and earn their pizza because I'm not a big seafood fan. In fact, I don't like seafood at all. And I just remember that there were whole sardines on some of these pizza, and that was a massive turn-off for me. But it's completely different culture. The Japanese love that sort of thing, or seems like they love that sort of thing on their pizza. And I saw this really interesting advertisement about Japanese product. They do sell a burger, pizza, rice. And this is a massive turn-off for me. I love burgers. I love pizzas, but don't combine the two, and don't combine the two with rice. And the other thing I don't like is pickles. I'm quite particular when I talking about burgers. I don't like pickles on burgers, and I'm just seeing pickles in this advertisement, and absolutely no way would I try this concoction they sell in Japan. Now, one of the reasons I am bullish about Domino's Pizza over the long term, I think they are going through a short to maybe even a medium term period of fairly significant headwinds. And that's pretty obvious with their half year results. And the other thing you have to factor in, because they couldn't really solve this inflation problem, is whether this company is a price maker or a price taker. So it seems like they have to take a hit if there is high inflation, because they can't really raise their prices all that much without affecting the overall business. So that is a concern moving forward for this company. But they do have fairly high ambitions in terms of store count. So right now they have 3,736 stores, and by financial year 2033, they expect the store count to almost double to 7,250 stores. And they might get there, who knows? But you can just see the stores over the last 5 years have gone from 2,400 to 3,700. So stores have increased by 50%. So I think because of the rate of store increase over the past 5 years, they can continue this rate of growth. The other thing to take into account, they do acquire quite a few different markets. So they've acquired Malaysia and Singapore, if I remember correctly, or maybe Thailand, two of those markets in Asia. And they also acquired Taiwan about a year ago, maybe just over a year ago. So they are still looking at acquiring different markets. So I think there is a good chance that this company will continue to grow from here after this short to medium term headwinds. And then I think there might be a period of really good tailwinds behind this company, just like we saw back during the period between 2013 and 2019. Doesn't mean it's going to happen, but I think there is a good chance that will happen. That's all I have for looking at Domino's Pizza's half-year results for financial year 23. Currently, the share price is down 24.5%. I'm just going to have a very quick look again, because maybe the share price has bounced. Share price can bounce, but the share price is down 23.5 cents. So instead of being down 24.5, it's now down 23.5. So the question for me is, I did have a buying price for Domino's Pizza. If it fell below $60, I would take a position. I was just kicking myself because the share price got down to $50 quite a few months ago, towards the end of last year or middle of last year. And I was kicking myself. I didn't take a position at that point in time. But I hadn't done enough research on the company. I thought at that point in time, the company was looking a little bit expensive. I've changed my opinion because of the potential of really good growth in the next decade, particularly if they hit their store count targets. So right now, with the share price decreasing by about 23.5%, right now down to about $53, $54, right in my target range, I am thinking about taking a position in this company, but I'm willing to remain patient, particularly if we see another significant sell-off tomorrow or even the next day. And if the share price gets below 50, I've decided I will take a position at that point in time. If it doesn't, if we see the share price go sideways, I might take a position at these prices, unless there's a significant bounce over the next few days. So if you have any questions about Domino's Pizza, if you love their pizza, because I'm not the biggest fan of their pizza, if you want to argue with me about their pizzas, leave some of your comments in, or your thoughts in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.